Ladies and gentlemen of the crypto space, we're live on a Wednesday, October 27th at 11:41 a.m. You guys see what's going on. We got stuff that's vertical. We got stuff that's down. We got the legacy financial system doing whatever the heck it's doing. We're going to take a look at S&P futures. We'll see what Ed's doing. The macro financials are a hot mess. You got inflationists that are more confident than ever. You got deflationists that are more confident than ever. I love the argument that inflation is deflationary because as price goes up, at some points people stop buying stuff, and that's deflationary if people stop buying stuff. So that's quite an interesting notion. Then the question becomes, do prices actually come down? Anyway, so to understand crypto, you really have to dig into macro financial, and that's how we've gotten to where we've gotten to, and that's that. You know, got to understand your place in the system. That why else do we look to SEC uh, enforcement actions and whatever the heck they're doing so much to understand the crypto space? That's part of the macroeconomic story. You know, the thought I'm trying to express is how John from Wisconsin, who's never heard of a stock before, and someone just told him about Shiba Inu, a crypto stock. I think a lot about that perspective. Just people don't know what they're buying, why they're buying it, how they're buying it, what it all means. Yet every single day for the last almost 2 years, we talk about this big stuff called macroeconomics. We talk about the depths and nuances of the crypto space. Yet John from Wisconsin is just buying Shiba Inu because Perry from the liquor store said to buy it. It's going to go to the moon. And then there's Safe Moon. So what does this all mean? This all means kind of what I was trying to focus on and talk about with the title. We're in a market of maximum volatility. It reminds me of maybe end of summer 2017, maybe vaguely, if I got my timeline right in my head. But yeah, let's take a look at the chart. How do we handle entries in such a market? And maybe even entries aren't the thing to take, especially on how not qualified, but prepared a person is. It's kind of like, do you go into the battlefield if you only have 2 weeks of trading? Do you want to really engage with these complicated markets when you have 30% down days? That is a massively complicated market to address. Um, Someone buys up here, spell it, 2.7 cents, and it's at 1.9 cents. That's a massive, massive loss. Now, I don't know who's selling, which is very interesting because there's a large group of persons that I know that have entries down here that have entries down here. Not even the big one. Entries down here. This is where my entry was. So I'm not selling shit right about now. I don't know who the hell is selling it. I guess that's a good question. It's got to be just people trading in these higher regions. But that's what's occurring. And you look at this, incredible. This wasn't volatile. But if you recall, if you zoom in, that was also maximum volatility, even more volatility if you think about it. The price range was much smaller. But look at those drawdowns, 86%, 69%, 55%. And then if you just go up here, because that's where the price action is now, very to the upside. But I'm on the 4 hour. So here's the same volatility if you think about it. Not think about it, if you actually draw it out. This is about a 60% dip. Let's do this. So I want to take a dip. I want to see the dip here. There. That's a 38% dip. We're currently on a 30% dip. So 3 meaningful dips. I don't really see a significant trend pattern here. You got higher highs and higher lows, and right now it's on the 100 SMA. That's another story. And I'm not here to say whether something keeps going up or keeps going down. My sentiment and my position isn't the way other people are going to play it. And I guess a lot of what I'm trying to talk about today is what am I doing? And it's not necessarily the best thing to do, but I can do it because I was so early down there, that bottom one. I don't really care what happens up here. I'm just like watching it and just like sitting back. And what I see is a lot of people putting in work, trying to figure out how to capture a 30% price swing. And I'm fortunate enough to not have to care. I'm just watching all this play out and let it go up, let it go down. The narrative is unchanged. That's all that matters is the narrative. So, part of the title of the stream is an entry. This is a freaking horrible, horrible place to take a position. You're taking a position in the heart of a market. And what does that mean? It means I'm probably going to get a lot of questions. I got to hit the questions soon. But how do you, I can't imagine taking an entry right about now. 1.9 cents compared to where it was like shortly ago. So how could anyone rationally say that's a good choice to take an entry here? This thing could retrace significantly. We could have a macroeconomic contraction. There is no price stability up here. I mean, you got a little bit like this. Excuse me. Draw. I want to draw a rectangle. I mean, I guess this is a region of compression, of congestion. That's right about there. Nope. Let's get rid of this. Let's get rid of the triangle. Let's get rid of that. Let's move this over. Now you could probably even tighten it a little bit. Say right about there. Station congestion. Let's look at the moving averages on the weekly. You see, that's the problem. It had such a run up so quick. So you got a price action region of congestion. Great, but the narrative's changing about mean regressionists. We're not going to get necessarily a mean regression there in the short term. I mean, look at that. You're on the daily TWAP. That's cool. That's cool to see it above the daily TWAP. And what is red? Red is the 10 SMA? Whereas the 10 SMA. Right in the 10 SMA on the daily, above the TWAP. So, this is actually probably what you want to watch for tops, or at least for a short-term top, or at least for when you're going to find one heck of a downtrend. When this thing breaks below the daily TWAP. It's been above it for a long time. Bumped into it, ripped. Bumped into it, ripped. Bumped into it, let's see where it rips. But the second you start to see a trend below the daily TWAP, that's going to be a brutal place to certainly not take an entry. That's not where you take an entry. You take an entry when you break above a long-term average. So you take an entry when you see the flip. So you might have taken it. And look, sometimes you can play just the daily TWAP and call it a day. You've taken an entry here, and this is a long time. Look how long it takes to play that sequence of events. I'm doing a lot of technicals today. So if you thought it was going to break out here and it failed, and then you got lucky. You got the next one here. It was 34 days, a month. You have to wait a month for it to potentially be another breakout. Failed, and then you got in here 64 days from that original failure, 2 months. And it's hard for human beings to think in terms of months, but it took 2 months for the price to get to a point where it's like, oh, this is a great place, and this is going to keep going up. So the same phenomena happens at the top. It breaks below that daily TWAP. Let me take a drawing tool real quick. Brush. It breaks below the daily TWAP. Oh, this is under daily. It's going to look horrible. But then it fails to get above it. And then a lower low. Fails to get above it. Lower low. And it fails to get above it. And here, look, here's the TWAP. TWAP loops around. And then maybe one day it bumps into it. Fails. Bumps above it. Fails. Lower low. And then finally it breaks above it. It prints a fresh higher high. And then fails. And you're like, oh. And then you're about there. Now you found support. Ah, fresh higher high. So that's previous resistance, flip support, and the higher high. And that's how you do an entry. That's how you find an entry on a downtrend. Because that's indicative that a trend reversal is more likely than less. Resistance, flip support, and the fresh higher high. And I guess the point I'm trying to make, maybe, am I trying to make a point? It's a freaking hard place to take an entry. Maybe if you think it's going to 50 cents and you're a big VC firm and you got 100 mil under management, and you can throw 10 mil into this, and the 10 mil turns into 50 mil, and you get a 5x, and then you're liquidating. What's the point? I don't know. Horrible place to take an entry. Let me talk to some of your guys' comments. Look at this drawing that I do. Uh, this is this is why I stick to talking rather than drawing. Alex is in the house. Hunter E. Dopey88. Dan Goldberg. Trevor's in the house. Joe's JT tweets always keep me check, even though I'm never sell. JT is an old school trader, an old school, market actor. I like him. Let's leave it at that. Jonathan, a pleasure. Killis, good morning. Patrick, morning. I want so many entries. F, X, S, C, V, X. Yeah, I know the feeling. Look at that. CBX has its volatility also, and Curve is just as volatile. Extraordinary volatility. It was up at $5.30. It's down over a $1.10 on $5, 20 something percent. Here, I'll show you guys the number. I mean, this is obviously, seriously, who took a position down 25%? Who took a position in Curve at 525, sitting with Curve doing what it did all these months at dollars, $1, a buck and a quarter, or dare we say the beginning of the year at 89 cents, or the end of last year at 50 cents, and someone said, oh, $5 is the time to take an entry. Now look at the candle. So this candle is a big wick. It's very comparable to a green wick like over here, or the previous top in May of 21, May of this year. So you could easily have a comparable sequence of events play out. You have a big dip. Interestingly, that would be like a massive cup and handle. Maybe if we go out to, no, we can't go any further, but then it could be something like that. Why not? A giant. And then we're going down to $3. So someone bought at $5, and now someone's gonna watch it go down to $3.20. That's painful. So how do you play that kind of volatility? I don't know. I don't have answers to all this. All I do is talk about it. Adam, what's up? What's up? Dan, can you please talk a little bit about liquidity concentrators similar to Uniswap v3? Yeah, the optimal one is called Curve Finance. That is a liquidity concentrator. Oh, other than what piques my interest is Popsicle. Visor's just boring. These VC backed, and the narrative that Abracadabra folks and all of them talk about Visor has come to pass. Um, I believe that uh, the liquidity concentrator, the capital flow management, I look forward to seeing what Popsicle is capable of. I'm quite surprised how things have played out over the last couple of months. Strange, strange sequences of events. You guys remember us talking about the uni narrative. What was it like? Visor, XTK, Method, huh. And now basically, yeah, XTK is still there. No discredit there. You don't come back. Everyone had their issues. Popsicle had the issue. XTK had a couple of issues. And they're able to handle their financial recovery. That's somewhat. It's very bullish when you can handle your financial recovery well. Method evaporated into nothing. That was vaporware. And Visor, I don't know. Not really interested because predominantly the narrative that Abracadabra talks about, it's VC back, so whatever. Goodbye. We don't need that. I I, I much more subscribe to the narrative of Abracadabra and Popsicle. Who needs VCs? You can crowdfund all this nowadays. So much capital the general public throws at things. And it's not a sale because now you can issue bonds and you can grow a treasury, a protocol treasury. So you can do things so different than you historically did them. Not even just in DeFi times, but in legacy crypto terms. Initial capital raises were done with initial coin offerings back in 17 and 18. The ICO craze, capital raises. But now you literally could sell your protocol treasury in exchange for your treasury asset being part of a liquidity position. So you could literally sell something and purchase liquidity in return, and that liquidity gets trapped in the protocol. So that offers a certain distinction as compared to just capital that's taken in, revenue that's taken in, initial coin offering, and you raised 50 bajillion Ethereum in 2017. But now instead of raising Ethereum, what the hell are you doing with it? You're buying liquidity, and the liquidity is healthy for the price of the utility asset, so on and so forth. So there's so many ways to do things so differently nowadays. I very much look forward to see how it plays out. Um, so I guess that plays into what I'm thinking about with regard to entries, and I often say it's quite different this time. So it's very hard to find entries. I mean, look at this. We have a historic breakout. We've waited over a year for this. Check it out. I mean, I remember folks tweeting, it's never going to stop going down. 1 year. It is 1 year to the day. So today is the confirmed breakout. So if you see, it's down what it is, obviously, from 5 and change. But do you realize that, folks? Today. Oh, no, this is the weekly. I'm sorry. Let's go back to the daily. The confirmation of breakout, we still haven't had an effective retest. Look at that. On the daily, the TWAP is just above historic resistance. So that would be, look at that. It's only 2 days. 1, 2, 3, 4, 5 days above historic resistance. We waited a year, 1 year, 365 days to get above this resistance line. Is this where folks are going to bail, or is this the start of a trend? You know what you can do is, if you want to be extra careful with capital, you put your a buy price or a limit order in at the 50 SMA, and then a sell. How the hell is this going to falter? This is a 1 year breakout in the making. So, my opinion, probably all you're best trying to do here is getting an optimal entry before it just goes absolutely insanely vertical. But that's another story. I'm horrible at entries. Look, you put a limit buy at the 50 SMA, and then you put a stop loss at previous resistance. Put a stop loss at like $3. That'd be the this if this is a failed breakout from historic resistance. That'd be the this might that would be the sickest failed breakout attempt in a long time. Anything that I can remember. That'd be crazy. And it's like, I mean, it's not really right at the end of compression, because I've showed you guys before the bottom could take us probably into next year. I'd probably do it right about there. So that's January, February, right about there. So it could fall out, or fall back in rather. That'd just be really weird though. Anyway, let's keep some comments coming. Professor J's in the house. Ding ding. Good day, Noah. What do you think about Luvium? Never heard of it. Encoder. Hello, my man. What do you think about Shiba Inu? Well, I don't know. I cannot, I'd love to have a more rigorous narrative around Shiba Inu, Doge, Hex, stuff like that. And, have it be meaningful. I know there's a virality to it, and the memeage is meaningful. From a tokenomics standpoint, tokenomics contributed to the success or the appreciation of the assets. Doge has horrible tokenomics, so that can't explain anything. That thing is just hyperinflationary. I mean, Hex has adoption that's greater than the inflation rate, but it has the locking components, which is significantly disinflationary. And frankly, as long as more people are locking than they are than emissions produced in the inflation rate, it's deflationary transitorily until the locks unlock. It's a very simple contract. Um, and Shiba, I don't know. I just really think people buy shit they have no idea what they're doing. They have no idea what they're doing. And what drives me nutty is that there's no way to capitalize on the asset without selling it. And that's the most useless asset. If you have to sell an asset to capitalize on it, it's a useless asset. No utility, no function. It's worthless. So, I wouldn't construct a portfolio of those types of assets. I don't know. I could probably develop a more robust narrative around Shiba, Doge, Hex, meme coins. But for me, the most important thing is utility and a revenue stream. And with none of those assets, you get it. You don't get any revenue stream whatsoever with Shiba. How much did you get at the end of the day? If you have $100,000 worth of Shiba at 9 p.m. tonight, how much money did it pay you? The same with Doge. Doge doesn't do shit for you. The same with Hex. At 9 p.m. tonight, how much did it pay you? Nothing. And that's the fallacy, or at least that's a complexity, because people see the locking component and they see that as yield, but it's more like what is described as, like a CD. You don't get shit. At the end of the day, you made nothing off a Hex, because you cannot take that money and pay your car bill or go out to dinner. You can't do anything with it. You have to wait for the locked position to mature. So that changes the dynamic. And therefore, it's an asset with no utility. It's more consistent with a savings utility, or Okay, when I say utility, I meant productive capacity or productive utility. It's not productive in the short term. It doesn't do work for you. It's much more consistent with a savings utility. So how does the savings utility of Hex compare with the savings utility of Bitcoin? Clearly, they both have a savings utility narrative. They're clearly very distinct. One has extreme, both of them have extreme meme culture. That's what's so fascinating. They actually have a fair amount in common. Anyway, I don't want to dig too deep into that, but as you can see, that's how I start to develop a narrative. I start to think about the relationship, similar characteristics between assets. Very interesting. The relationships between assets and how you describe and talk about assets. Professor J, they talking possibly taxing unrealized capital gains. You see that happening? We'll see what they do. I don't speculate on anything. I think I don't think they understand what the systems they're trying to regulate. Some of them do, obviously. Cynthia Loomis, Tom Emmer, and many others. They know what they're getting involved with. The vast majority are above their pay grade. Um, I bet Noah Shiba's bags are filled to the brim, Shiba. No, I have no interest in that asset, albeit it is collateralizable on Abracadabra. Huh, which is interesting. There's a couple $1 million of liquidity available on Abra the last I checked. Let's take a look real quick. No, I don't have any interest in an asset unless it pays me at the end of the day. And the problem is that asset doesn't pay me at the end of the day. SHIB. Look at that shit. The entire SHIB community has no knowledge of DeFi capital markets, be it money markets or debt systems. The SHIB community is departed from the technological innovation that's occurring in DeFi. This is a perfect piece of empirical data suggesting that. Um, the participants in SHIB have no idea what's going on in DeFi and what it means as a movement, as a technology, because they're unaware of this very meaningful component of DeFi. So there's no due diligence. No one's done any work. No one. They respond to emotion. And the complexity is with that emotion is we know what happens historically. We've seen it in the crypto space. We've seen it in legacy finance. When stuff starts to go down from an inflated state, it goes down really quick. And it goes down faster with assets where the market actors don't have any experience handling money, don't have any experience with volatility, don't have any experience with the history of the crypto space. And that's kind of what like SHIB is. You think if SHIB drops 20%, everyone's going to be panicking. You're going to start seeing TikTok videos of people crying they lost their entire fortune or all their money is gone. Oh God, no one saw it coming. Because the market actors have no idea what they're doing. And that's a big reason why I don't buy SHIB. I don't trust the market actors. The market actors are novice. I'd rather partake in an asset that has sophisticated market actors. Look, clearly, you see my choices predominantly curve and very early on spell. Sophisticated market actors. You do very sophisticated things with Abracadabra. You do very sophisticated things with the curve platform. So why is it going up? There's very obvious reasons why it's going up, and it's not. Oh my God, Curve's going to the moon. It's like Shiba Inu. It's going to go up because it has a great brand and it's going viral. And Elon Musk put a put the logo on the side of a spaceship. Put the Curve logo on the side of a spaceship. That's why it's going up. No, it's going up because it's deflationary. Spell's going up because it's cranking out more revenue than MakerDAO. The heck is these other assets? You got to ask yourself why an asset is going up in value. Otherwise, what the fuck? Then you're literally just buying something because some schmuck said, "Oh, it's something that Elon said he's putting on a rocket ship. That is the stupidest reason. Even if you make $1 million, that is the stupidest reason to buy an asset. Can you imagine how stupid the story would sound at Thanksgiving dinner? That is another way to manage a portfolio. Manage a portfolio to avoid stupid stories to tell if you actually make money. If you make money, you better have a good story to tell. Like, yeah, I understood the monetary policy of the asset, watched it go from hyperinflationary to disinflationary to deflationary, watched it bottom out at 35 cents, held it for a year and a half while it experienced a triangular compression, two waves down, final inevitable breakout under deflationary pressure, pushing it above $5, and then it lifted off to $30. That's a Thanksgiving story. That's a damn story. Not, I bought a fucking dog because Elon Musk said it was going to go up. No, that's a stupid story. Need some good stories. Joe, I bet, no, I told you about my Shiba bags. Nope, nope. Food Bear. Yep, that's the bargaining ploy. Martin, hey Noah, thoughts on that nasty Ave wick from last night? Haven't been following it. I have a little Ave position, but nothing that's even remotely interesting. Hey, Captain, I'll talk to you in a bit. We'll figure that stuff out. It shouldn't be too hard. I did a bunch of updates today myself, which ultimately it's still working. So, anyway, can you explain your ample interest? You don't see how it aligns with your espoused philosophy on buying company slash productive assets. Huh, let's take a peek and see how ample aligns with productive assets. It only provides 86,000% interest. My man. That's pretty productive. Um, FM, study Mark Kishan, Christopher, to protect your crypto wealth from. Yes. So I like the way you're thinking. There's a lot of tax nuances. And what's the biggest thing? You can't sell, but in order to not sell, you have to be early. So, for instance, we were. This was exciting times. I was buying this all the way down, and you guys know my entry on Spell, so I don't have to sell. This thing could go all the way up and then all the way back down to $2, and then in 5 years' time, it's spell curves running around at $100, $150. I don't ever have to sell any of it. But then you get into the complexity of unrealized capital gains that you guys are mentioning today. So I don't know. Not going to be easy to traverse the tax system soon. FM, if you don't have a live life claim, you're dead on paper with no rights. Yeah, the government is very scary right about now. So I feel you, man. Good morning, Assange. Um, Mark, FOMO. No more FOMO. We don't have time for that shit anymore. Alex, somebody always buys the top. Then that top becomes a bargain sooner or later. Yes, and it might take 4 years, like Bitcoin being bought at $20,000. So these are valid points. Dan, I need more time to accumulate curve in the $2. I hope that dip comes. Possibly. Possibly. I know you're happy with your CVX CRV position, but would you ever move some to so CVX CRV to CVX? So this was a nice thought, meaning it's possible CVX is more lucrative in the future just from bribes. So CVX CRV obviously benefits from CVX and CRV monetary policy plus um, transaction fee volume on the current platform. But CVX is the power to control the current monetary policy, of which is trivially lucrative with regard to its revenue share from convex LP positions. Um, but it's powerful because the bribe system, which is done with Vodium, and people will pay you a hefty amount of money to vote a certain way, which is interesting from a historical political standpoint. But with a large CVX position, that voting power you control can be quite valuable. And we'll see how it turns out. It might actually be more valuable than a CBXCRV position. I don't care. I don't care about what makes me more money. What I care about is avoiding capital gains and generating a revenue stream. And can I do that with both? Probably. Which will make more? I have no idea. Am I going to get my titties in a twist trying to figure out which is going to make more? Absolutely not. Professor J, Chris is producing about 50% over 10,000% if you landed on Aave. Yeah, and I think Benki on Avalanche just got up and running. So here's the thing. What have you seen about Ample? It seems like it's been keeping up this rate of interest, and I find that interesting, considering the rebases that have occurred. They have occurred, and the depreciation has occurred as well, as expected. Told you guys to expect a 50% hit, and it hasn't been 50%. It's been like 20%. Let's see if Ample loads. Come on, ChartX, baby. Yeah. All right, so a buck 30. The target was a dollar. I was telling you guys to expect a 50% hit on Ample. So notice that it's down about 40%. Here, let's chart this. Check this out. Price range. It's down about 45%, but where it is right now, it's down about 40%. I bought about 20 chip worth, down about 20%. Cool. Pretty good. So that's how much revenue it's making. So I bought 20 chip. Where I saw this at like 24 at one point. It just kept going up. This is the type of thing. This is the epitome. If you can handle Ampleforth, you can handle an entry at a relatively high valuation because this is you're guaranteed to lose money in the short term. 9 hour rebase, targeted buck six. So you guys know what's going to happen. This will go down further. So when you are at an Oracle rate of $1.78 and a price target of $1.06, the rebase is going to increase supply. So all of a sudden, people that are borrowing, they have double the supply. They have more of the asset, which they could sell at the market price. And the purpose of that is to drive the price down to reach the target price. This is not an asset that's going to go up. This is an asset. When it goes up, the monetary policy changes to push it down. And when it goes down, the monetary policy changes to push it up, which is actually very interesting considering what you could probably see as somewhat of an average price. Maybe that's an average price. It spends, I don't know. What was I thinking? It's not an average price of 70 cents. Its target is around the buck. So let's say you look at it like that. Spends the vast majority of its time with appreciated pressure. It's pretty interesting. Or maybe it's not the vast majority, but very interesting spikes to the upside. And then it gets crushed because they inflate the circulating supply, which crushes the price. And then it comes down, and then they actually contract circulating supply. I mean, this is literally like a reserve asset where the central bank has full control over every commercial bank account that has the asset. Absolutely extraordinary monetary policy, the capacity to rebase an asset through all account holders. So this is just a new dynamic. 10,000. Watch this. This is a fascinating one. Watch this, guys. I'm going to put this in the stream. So watch this page. Watch this available liquidity. This means everything. If this goes bye-bye, this is probably someone putting in new liquidity because this should evaporate. If this evaporates within the next 5 to 10 minutes, that's what I find most fascinating. Find that very fascinating. Any opinion on secret? I don't have a capacity to provide an opinion on it. A lot of people in my close communities have been talking about it, though. That's all I know. Crypto bets. Hey, Noah, checking in. Frog Nation, Ice Cube, Popsicle Status. Yeah. Can you enable the live chat to be seen after the live stream is over? Sometimes I miss it live. It should be there, to my understanding. I don't enable it nor disable it. It should always be there. Maybe it's just not YouTube processing that doesn't work always for all videos. Do you think the protocols in the future will just own their own liquidity instead of going through Olympus Pro? Yeah, but bonds is a service, so it's a valuable service, and a lot of protocols may opt to just use the service, pay the cut, because then they don't have to do the technological implementation. It's an implementation, and that's why Olympus Pro is what it is. Someone did it, and every protocol now doesn't have to do it because Olympus Pro did it. Otherwise, every protocol has to do it individually, which requires either forking and doing their own implementation, but that's work and effort. So we'll see how that plays out. Alex, the CRV movement is just getting started, more likely than less. I hope they bail. I want more curve. No, I don't think it's going to happen, my friend. Mitch P, don't enter accumulate. Yeah, I haven't moved capital into the crypto space since March of 2020. For what it's worth. You can collateralize SHIB now in Abracadabra. Yeah, right? that was an interesting addition, Mario. Joe, SHIB will continue to rise because it can draw from ADA, XRP, and Doge retail apes. Well, you're trying to categorize it part of a group of assets where people just buy not knowing what they're buying. Because that's what it is. Nobody buys XRP, ADA, Doge, and Shiba Inu. If they understand monetary policy, they understand macroeconomics. The only reason in fact, the more astute you are as an investor, the reason you buy SHIB, ADA, XRP, and Doge is because of the meme factor. It's because of the virality, the irrational exuberance. That's why historically any of those assets are known to be bought. So, which is interesting for Cardano, which is extreme technology. Extreme technology. No useful products currently. Very complicated asset to understand. And XRP as well. XRPL is very, 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 very meaningful technology. I have no idea why the heck it's valued like it is. I look forward to it getting its issues resolved with the SEC. That's ridiculous. But the tech is cool. Whether something is done with it's another story. And the price action is mutually exclusive from the tech. Where the hell is what's that AMM coming up for Cardano? It's like what finance? 1 second. Sunday swap. I look forward to seeing what that thing does because they've been talking about it. They say Q4. All right, Then we need the bridges. Then we need the money markets. Then we need the forex market. You need all the markets. It's not easy. And even if you had all the markets, it takes time for the momentum and the capital flow to build. What are you building? You're building monetary velocity. It's the same shit we've been talking about for all these months. Monetary velocity, boys and girls. They still have to build it. Food Bear, my narrative. Elon and other whales are pumping and dumping. They will damage the working man, dumb money, give reason for more regulation. Maybe. STJ, hey Noah, what are your thoughts on the revenue stream potential? Yeah, CDX's big deal revenue streams, potentially comparable to that of the revenue CDX CRV produces, speculatively, of course. Hey, look, hey, where'd the liquidity go? So you got a borrow rate of 185,000%, and every damn dollar that goes into available liquidity for Ampleforth is borrowed, earning lenders 87,000%. That's extraordinary. This is new for Ampleforth. We knew what Ampleforth does with rebasing. We know what rebasing does with Ohm and Time and all those forks. But Ampleforth was the first. And now there's a way to capitalize passively. So historically, it was proactively or active management where you capitalize on the rebase. But now you can passively capitalize because people are borrowing to capitalize on the rebase. And they're borrowing at an exorbitant rate because they could outperform it. They could do better. Can you imagine they're doing better than 87,000%? How? Because if they're making 50, 100% in a day, technically that's better. Technically. Um, Lewis in the house, is this sell-off related to Cream Finance? Not necessarily. The sell-off is related to, bear with me. I mean, Ethereum, this got a ridiculous cup and handle or ascending triangle, whatever the hell you want to call it. Come on. The sell-off, equities markets look good. That's crazy. I mean, who would buy this shit? I mean, you literally could put like, could you imagine like a statement on like a major news channel? Who the fuck would buy this shit? Who in their right mind buys this shit? That's crazy. 10-year looks like it's hitting resistance. What's that? What that gray is properties? What is that? Oh, style. Gray is a 200 SMA. I really should get my color schemes in check. So it didn't even hit resistance on the 200 SMA to get interest rates up. This looks like bond bullishness. People are going to be buying bonds. When bonds are getting bought, risk assets tend to get sold. That's generally the way it works until there's uncorrelation. DXY. No, let's zoom out. You need to zoom out on the dollar. All right. Hey, Lewis, a little, historic equities macro consideration. What happens when the DXY hits resistance? I mean, is that resistance or what? Look at that. 1, 2, 3, 4, 5 weeks. It can't get above the 100 SMA. 1, 2, 3. This is the fourth week. And in 2 days, we'll see if it can't get above the 100 SMA. That's resistance. Albeit, look at all these weeks it spent above the 50 SMA. This is a heck of a crossroads coming right here. You guys see that? Wow. That's actually pretty crazy if you think about it. Look at that moving average. Look at that moving average. You can imagine it goes like this. Ooh. And there you go. Now you got somewhat of a flag. You got a bit of a flag there. Yep. Maybe it's a bull flag. Maybe it's a bear flag. Look. Maybe it's a bear flag. Who knows? But it's right. It's below resistance. It's above support. And this thing plays games with the whole world. Fiat pushes everything around. Really annoying. Also, the Doge, Shiba, GME are aspects of late debt supercycle where liquidity sloshes around looking for escapes from hyperinflation. Yeah, it's an interesting statement. Lewis, did I hit you, Lewis? BK, hey, no, if you start investing in crypto today, which three would you pick? MIM, GUSD, and UST. Frax. MIM, Frax, UST, and GUSD. Four. That's what I would pick, my friend. Dan, I think regarding meme coins is a good potential gateway for a select few who will see SHIB as useless. Well, it is useless. It doesn't do anything. But then again, I guess dollars don't do anything either, so it's useless as well. So who am I to judge whether useless is good or bad? Buy SHIB and lottery tickets at the same time. Well, it is a freaking lottery ticket. But then again, that's what I like to think. Is this a lottery ticket? Maybe it's not. Maybe it is. Maybe it's the same thing as SHIB. I mean, I put 20 grand in here, 87,000%. I should be making a little less than 2 mil a year. Is it a lottery ticket? I don't know. I'll find out next year. Captain, what's your take on the beef between Danny and Ohm Devs? I think just people get their panties in a bunch, a fair amount. And when there's a lot of money going on, and they're both basically titans of the crypto space, as a time not funneling 30%. Yeah, but Ohm has not been, hasn't, it's not, it's a little contentious, there's friction. It hasn't been the most arms open wide type of environment. So there's some complexity there. That's what I think. Craig, my man, he's in the house today. Crypto Bentley, I love your wisdom. You're very welcome. And quotas, stupid was 11 years ago. A man paid for a piece of 10,000 BTC. Nobody saw it coming. Nobody saw it coming. I got $100,000 bed sheets upstairs. I think I paid 2.5 Bitcoin for a bedroom set back in like 2015. So, and really, 2.5 Bitcoin, it must have been like $700. I spent $700 on a bedroom set. All right. So I know what it's like in many regards. That was Bitcoin at like $250 a pop. Does Spell have the fundamental longevity to drive it to large cap status? These are big thoughts, and we'll only know in hindsight. Cream Finance got hacked, big deal. Yep, massive deal. Are you following the development SEC guidelines stablecoin? Yeah, of course I am. Frax, MIM, UST. Woo! That's what I'm talking about, baby. I told you guys that stablecoins was the biggest narrative. Go figure. Dollar denominated shit. Dollar stable coins. I would love to find the original video or an original tweet where I said the stable coins are going to be the biggest fucking thing in the crypto space. The biggest thing. Whoo! Nailed that one, didn't I? All right, someone get me off my high horse. It was a good idea. It was a good idea. Just saying. FXS, number one Toke reactor. Whoo, yeah. So, yeah, it's been doing really well, FXS. Sir Joe, present, a pleasure. Crypt guy, look at ample liquidity, just got all eaten up, right? They go bye-bye. They go bye-bye. Which means 87,000%. It's like 50% a week. It's much more than Olympus, than Ohm and Time. Much more. 87,000%. And, you know, what's cool about it is you don't need a lot. If you're going to deploy capital here, it's like, this is that 1% type shit. 1% of the portfolio. You know, my position size is respectable with my portfolio size. But if you got 100 grand, you put in $1,000, less than $1,000, $750. Okay, you don't put in meaningful parts of the portfolio. And for what it's worth, that 20 chip is tiny. So, and you'll see how it plays out because 87,000%. You don't need a lot of capital. You don't need a lot of capital to make a lot of money. You can't even, there's no percent yield calculators out there that'll take 87,000% as an input. So, how the hell do you process 87,000% APY? Well, 1,000% is a 10x. So, 10,000% is 100x. This is 870 multiples, 870x. I don't know. Let's just see for the fun of it. Calculator. Times 870. It's not gonna. Is that 17 million? So I put 20 grand in. It's gonna be worth 17 mil. I have no idea what's gonna fucking play out. We'll see what happens next year. 20 grand is going to turn into 17.4 million. I don't know, but that's the type of bet that I want to take. Calculator. So if you put in $1,000, you're talking put in $1,000. Turn $1,000 into $870,000. 10x 1,000. Am I right? 10x. Yeah. 1,000% is 10x, so 10,000% is 100x. This is 870x. Yeah, I'm right. Do you know what yields will popsicle relaunches? High. They will be very high, Peter. BK, Caleb, 20% of Ice Profits. That's right, Caleb, Peter, 20%. And Dino, thank you, brother. Look forward to your video every day. It's a pleasure. Foo Bear, once the regulatory frameworks are established, then the CBDC can happen. When it does, trillions, if not hundreds of trillions, come into crypto. I see that as well in many regards. And we have the China narrative, which we must not forget, with the China BSN. If you have not looked up the BSN on Twitter, probably a good thing to look up. Noopy's in the house. Always a pleasure. Welcome. Crypt Guy, 5K invested and is about 4.5 milli. There's your bet. If 5K goes to zero, you lose 5K. Bear in mind, Ampleforth's been around for a couple years, so how does it go to zero? These are interesting technological questions. These are very interesting questions. And these are unprecedented technologies. Can you imagine being able to get 87,000%? Why? People are paying it to you. This isn't inflation. This isn't coming from inflation, boys and girls. These are people borrowing it and paying 1,850x on their borrowed money, annualized, because they could do better. Because they're not holding it for a year. They're holding it for a day or two for a rebase, and they're getting 100% on the rebase or whatever. I don't know. I don't know. I don't care to know because they're putting in work, and I don't want to put in work. So what do I see? I keep my eyes on available liquidity. And for me, passive is the way to go. So as long as this number is massive, that's cool. If available liquidity dries up, I mean, if it gets large and people aren't borrowing, then the trade falls apart for me, considering the way I look at the trade. I'm more than happy to lend ample to people at a ridiculous number, considering the rebase. Let them outperform. Let them do better. That's okay. I want the passive returns. And you don't need to take a large chunk out of the portfolio. So how does that work? How does that work? I don't know. I got to wrap this up in a couple minutes. 5K invested, 87,000%. Degen Farms also have that kind of APYs. How is AMP different? No, Degen Farms don't have this kind of APY. Degen Farms have inflationary APY. They're just printing that shit out of their ass. This is Aave. Someone's paying you to borrow your asset. That's the deal. This isn't Degen. This is a rebase and a money market. The rebase is allowing people to speculatively make more than 185,000% on a position. Annualized. So you're talking, they're making their returns on a daily basis. See, this is the biggest problem with folks getting into crypto. They see these percentages and they don't have any idea what it is. So you see, oh, here's 87,000, and then you go over to like ICE shitcoin on Phantom and you see 80,000%. And you're like, oh, they're kind of the same. But they're not. Very different technology. That 1,000%, that's like pool 2. And that's what Olympus Pro fixes. Pool 2s. You no longer need to hyperinflate your currency in order to bootstrap something. And those hyperinflationary currencies, they all end up dying anyway. I don't know. It's such a waste of effort to build all that infrastructure around a pool too. Anything that's hyperinflationary is fucked unless it has like a serious disinflationary, deflationary component, as per traditional monetary policy rules, so to speak. So this is not hyperinflation at all. I'm still trying to digest how this affects circulating supply and overall money supply because it's not hyperinflation. These are people paying you to borrow your asset. Absolutely fascinating. Um, how do you deposit? You press the deposit button and you'll have an ample balance and you press deposit. Um, please, if anyone's doing this shit, this market could lose a shitload of money, guys. So just be very careful and make sure, like, if you have 100 grand, you put in $1,000. If you literally have $1,000 and you're putting $1,000 into Ampleforth, I guarantee you're going to lose money unless you're prepared for. This is what's going to happen with Ampleforth. Put $1,000 into Ampleforth. By tomorrow, you're going to have $600. Do you understand? You guys understand? $700, $750. You buy $1,000 worth of Ampleforth today, you will have less money tomorrow, guaranteed. So take that into consideration. And what does that mean from a volatility, from a rebasing currency, from a new addition to the money market system? What does that mean from that standpoint? How do you process that? You are guaranteed to lose money by tomorrow if you buy Ampleforth. So I think about these things a lot. And more so, I try and also tell stories about them the best I can. Because could you believe that? I bought 20 grand worth of something, and it's guaranteed to lose money. Why would I do that? Because I'm trying to understand the money flow and the dynamics of this, of even more so this. When I see this, I don't just see a line going up and down. There's a story to be told here. I find it fascinating, and I want to see how the money market causes, or rather, how the money market behaves for lenders and borrowers in response to the price action. And I speculate that this is going to be quite interesting. I'm keeping my eyes on available liquidity. I want to see this thing constantly getting shot down. And I want to see what conditions allow it to actually go up. And if it goes up, how long it goes up for, and by how much, and for how long. Digesting everything that's going on. Anyway, let's wrap it up. BK, if you missed CVX, what would you buy? No, I can't. I'm not going to start right now. It's okay to be late, and it's upsetting to be late. The odds are the vast majority of folks completely missed out on CVX and CRV. Completely missed out on Spell. I mean, you can't buy it now. I would never buy it now. I would never, ever, 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 ever buy CRV, CVX, or Spell now. But I'm biased because I bought it a long, long, long time ago when nobody was looking and everyone was trying to buy something else that was going up. As I always tell you guys, capital flows from underperforming to outperforming. So everyone's looking at Spell now because it's up 30x on the money because it's going up. People move capital from underperforming to outperforming, and it's outperforming. Where were folks when it wasn't outperforming? So I like to buy the things then. 35 cents, 40 cents for Curve. Last year, everyone thought it was hyperinflating to nothing. Anyway, why are you getting 60% on another platform? Well, it is an Aave. So this is the geyser. The geyser incentivizes the Aave money market. So you're getting an additional 60%. That's the way it works. So 60% on X amount deposited into Aave. Notice that they're UBA Ample. So there's your Aave interest bearing Ample. These are your Aave deposit tokens. And then Ampleforth is incentivizing the Aave deposit tokens for an additional 60% on the money. So look, I put in 20 grand, it's down to 16. I'm going to check back in 6 months and a year. I have a feeling this is going to be a fair amount of capital. Wednesday, October 27, 12:47 p.m. As always, thank you all for joining. Tell everyone to subscribe. You know the deal. After party on Discord. I got to get to a bunch of ask vids. I got to catch up. I got a whole lot of stuff going on. I'm trying my best to take care of it all. So, as always, I wish you all a wonderful day, and I will see you again tomorrow. Peace.